right, let's be honest here. SMC doesn't work. The way you trade it, it doesn't work. You never get your entries. You're always missing trades. And yes, 1 out of 10 times, you might get an entry and the trade might play out in your favor. But for the rest of the time, it's not going to play out. And then you're going to start asking this question, can you even make money with trading? Well, let's talk about the basic rules, right? What everyone that has been teaching SMC, they teach it like this. So what is it? First of all, identify the order flow. So you want to be always trading with the trend, right? So that is a valid point. So number one rule, we are not changing anything in this, all right? We have a bearish trend. Now, we want to look for a liquidity sweep, right, in the opposite direction of the order flow. So the order flow is bearish. We'll look for buy side liquidity sweep. Then we look for a market structure shift. Very simple stuff, right? And then we are told, they tell you to mark out the supply demand or order block, whatever you want to call it. And then what happens is price goes up a little bit, pushes down, but when it comes back to your your order block, it doesn't respect it. Price doesn't respect that order block. And there is a reason why it doesn't do that, because price has already made its move to the downside. All right. In this video, I'm going to be teaching you the best entry pattern that you can use with SMC trading strategy. Now, it doesn't matter whatever you call it, whether you call it ICT or SMC, the main premise of every strategy, a very good strategy, is first of all, trading with the trend. That is number one. Then looking for opposite side liquidity sweep. So if the trend is bearish, we want to look for buy side liquidity sweep. That is your second step. Then we look for further confirmation, and then we look for our entry pattern, and we target the lows over here. So what exactly is the entry pattern, right? Because don't lie to yourself. I know how many times you have missed your entry, and whenever price comes back to your PD array, you always get stopped out, and then price may reverse down, right? So a very, very simple and easy entry model that I'm going to teach you right now. And later on, I'm going to give you guys examples on how you can improve the win rate. And also, I'm going to give you examples so you guys know what I'm actually talking about. So first of all, rule number one, we are going to make SMC work, okay? So rule number one, identify a very clean order flow. To do so, what I do is I open up a pair or asset, and within 5 or 4 seconds, I should be able to identify the direction of the market. Are we going up or are we going down, right? If I cannot identify the market direction in 3 or 4 seconds and I start getting confused, then I'm going to move on to the next pair. It should be as clear as, you know, a water in Japan, and I don't know. It should be very, very clear, all right? So once we have the order flow, we want to mark out significant highs, right? So this is significant high, lower low, lower high, lower high. So I'm talking about lower high, significant, lower high. This is very important. This right here, right? These are liquidity pools. Now they're going to be, highs printed around these levels as well. But we want to always mark out these significant highs over here, right? Because that's where most of the liquidity is. Now, the next step is we wait for price to take out the liquidity. So over here, you can see we have taken that out. Now, once we have the liquidity sweep, right? Look at it here. We have this low and this high. This is a dealing range. So, oops, my bad. So we are only going to be using one time frame for this strategy. So we have this low and this high. That is our dealing range from this low to this high. Now, inside this dealing range, we want to identify how many fair value gaps are in this dealing range. So if there are 2 fair value gaps, right, we have to keep that in mind. So let's talk about this scenario where you have, so let's talk about the first scenario. So you only have 1 fair value gap in this dealing range from this low to this high. Now, in simple words, guys, all we're waiting for is to price to form inverse fair value gap. Okay, but hear me out. I'm going to teach you the second step, which is very important. And if you miss that out, it's not going to work. So in this scenario where we only have 1 fair value gap in the dealing range, and dealing range is the last low to last high over here. If we have 1 fair value gap, we wait for price to close below it. So this fair value gap gets inversed. Now, instead of waiting for a market structure shift and then trying to catch an entry, I'm going to enter right away when price inverses this fair value gap. That is going to be my entry. My stop would go somewhere around here, and I'm going to target this low over here. Very simple stuff, all right? This is going to always provide you with entries, all right? And according to my data, if you wait for a market structure shift and then take your entry, you lose more than with this entry model. Okay, now what is the second scenario? We have multiple fair value gaps over here, right? So which inverse is going to be valid, right? So when the first fair value gap gets inversed, we are not going to enter. We are going to wait until the extreme fair value gap in this dealing range. The dealing range is from this low to this high over here, right? When the extreme fair value gap or the last fair value gap gets inversed, all of the fair value gaps are inversed, then we are going to take our entry. Very simple stuff. Now, there are 2 ways to enter. You can enter right away. Your stop loss is going to be big, or you wait for a retest entry. So something like that, right? So over here, stop loss placement, right? We have this high and this high, right? Oops, my bad. Whoa. Okay, let me just move that. Oh, come on, man. All right, let's just do that. All right, so you can see we swept this high over here. So price has no reason to go up once again above this high because this high has already been swept. So a very logical stop loss placement would be above this high because this has been swept by this move over here, right? And then you could go for 1 to 2. That's what I do all the time, or you can target this low. Very simple stuff, guys. And by implementing this one small entry technique, I can assure you, you're never going to miss your trades. And the win rate is even better because let's say that you wait for market structure shift, right? And when price is coming back into your PD array, price has already made its move. So when it comes back to your auto block or fair value gap, it's going to go up most of the time, right? Now, let's talk about the break-even rule. So when we have our entry, we mark out the very closest liquidity level, and that would be this low. So when we get our entry on the retest and price breaks this low over here, we go break even. Now, at 1 to 1, you can actually take 40% of your position off, 40 or 35%, just so you secure some profits, because I'm going to be telling you about the time frame that we're going to be using the strategy on. That is very important. If you want consistent results with this strategy, the time frame, ladies and gentlemen, is 4-hour time frame. So we're going to only be trading on the 4-hour time frame. Why? Don't ask me why are we not trading on the lower time frame? Because the order flow on the 4-hour time frame is much more significant than an order flow on the 1-minute time frame. Let's be realistic here, okay? So the price action is cleaner on the higher time frame. Although people say time is fractal, and it is. The patterns that occur on the lower time frames and the higher time frames are same, but it doesn't matter that the price action is going to be cleaner on all of the time frames, right? It's just not possible. So there's going to be more noise on the 1 minute time frame. So break even here, we take partial at 1 to 1, and then we can hold till 1 to 2, 2.5, or 3. Or the last scenario is that we hold till here. Okay? It really depends on your risk management style. But I suggest break even at the closest liquidity sweep, partial at 1 to 1, and at 2.5 or 2, I close my entire position. I make money and I look at other pair. Now, since we're going to be trading on the 4-hour time frame, we can trade all of these pairs and assets. It really doesn't matter. Just make sure that you're able to identify the order flow perfectly. Now, same rules would apply on this. If the order flow is bullish, right? Same stuff. Everything is same. So now that we have learned the entry model and the strategy itself, I'm going to give you guys some examples and then I'm going to end the video. All right, guys, so here is example 1, and I'm looking at USD CHF on the 4-hour time frame. Now, of course, you can trade it on the daily time frame as well if you are into swing trading and you think that you don't have enough time on your hands. Then of course you can trade the daily or even the weekly, but the lowest time frame that I would choose for this strategy is the 4-hour time frame, because the big institutions, right, they're not looking at the stop losses on the 1 minute time frame. Let's be real here. All right. They have so much money that they're not worrying about your small stop losses on the 1 minute time frame. 4-hour, daily, weekly, and even monthly, those are the time frames that these people, the market makers, are looking at. All right. So you can clearly see that the order flow is bullish. All right. I don't have to look twice. I know by like within 5 seconds or even like 3 seconds that the trend is bullish. Now, notice what happens here, right? We swept this higher low. So we have a higher high, higher low, right? It was printed and the price was leaving behind these lows over here. And when you have these lows untapped, there's a very high chance that price will come back down, sweep them up, and then push towards the upside, towards the current order flow, right? So price pushed down, it took out this higher low over here. Now the next step is to identify our dealing range. So from this high to this low, that is our dealing range, from this high to this low. Now inside this dealing range, we have to identify a fair value gap. So over here, we have only one fair value gap that is resting around this level. So now, instead of looking for a market structure shift or a break of structure, I'm just going to simply mark out the inverse fair value gap. And then notice what happens. When we close above it, this fair value gap gets inversed. Now, my entry is going to be on the retest. My stop loss is going to go slightly below the inverse fair value gap because this is the last low that price swept. So price has no reason to go back down again because there's nothing to sweep, right? So you can see that price gave us almost 4 or even more than 4 RR. So this was a very clean trade. It happened on USD CHF recently. You could have taken that, but again, it's not gonna work every single time. With every other strategy, you're gonna have losing trades. I'm not giving you the magic strategy that worked 100% of the time. Please understand that trading is all about risk management and your psychology. Right? This strategy is very good, but at the end of the day, if your psychology, if your risk management is not intact, you're not going to make money. And I'm being honest with you here. I'm not going to, tell you that you need strategy. This strategy is going to make you, all right, the bike passes by. That's perfect. Okay, I'm not going to tell you this strategy is going to make you a millionaire overnight, but if you stay consistent, and you work on your psychology, you meditate, you do mindfulness, it's going to work out for you phenomenally. So let's move on to the next example now. All right, guys. So here is another example, and this happened on gold on the 4-hour time frame as well. And very similar setup to the previous example I showed you. So the order flow is clearly bullish, right? I don't have to go back and look at the old trend. I'm just looking at the current price action. And if it's going up, then it literally means that the order flow is bullish. I don't have to look at the market structure, to be very honest. I just know the price is going up. Like within 3 seconds if I open that pair or asset. So right now you can see that we had this a low right? And this got swept. So just above it, what do we have? We have a fair value gap, right? And if I mark that fair value gap out, you can see that we closed above it, so it got inversed. Then we had an entry on the retest. This is a very the closest liquidity level. You could say this as well, but to be honest, I would mark this because this is the closest valid liquidity level. Now, when you get an entry, where is your stop loss going to be? Slightly below the inverse fair value gap. And this setup was actually sent out in the Discord server. So if you want to be part of the Discord server, the link is down in the description. You get access to my entire premium VIP course where I teach everything in order. So on YouTube, there are videos here and there, they're spread out. But on my course, I have a very fixed way, like a very clean path for you to learn everything that I know. All right. So the link is in the description if you're interested. It's not necessary, but again, if you trust me, if you have found my concepts to be working for you, then you should go for it. So on the retest, that is your entry, and you can see it gave us around 4 RR as well. Let's move on to the next example. All right, guys. So here's the last example, and you can see that the order flow is bearish on AUD USD. And what do we have? We have a lower low, lower high, and then a lower low. Afterwards, price comes back up, sweeps this high over here. Do we have any fair value gap in the dealing range from this low to this high over here? And if you look closely, there is a very small fair value gap just around this level. So if I zoom in a bit, you can see it's right there, right? So when the body closes here, what do? We take our entry on the retest. That is going to be your entry. Your stop loss would go somewhere around here because the fair value gap is a bit small, right? You want to keep it safe. So somewhere around here above this high over here, right? It's a very good place. Placing your stop loss will require some practice because you want to keep it as short as possible, as small as possible, and as safe as possible as well. So you can see you could have taken this trade. It played out perfectly, giving you around 5 RR. So that would be it, guys. Thank you so much for watching. I still have flu, but I'm trying to make videos for you guys. I'm going to be back with more videos in the future, but this is it for now. Thank you so much.